Entering the stock market can feel overwhelming, especially for beginners who are unfamiliar with the terminology. Understanding key stock market terms is essential for making informed investment decisions and navigating financial news effectively. Whether you're planning to trade actively or invest for the long term, knowing these fundamental terms will give you a solid foundation. Here are the top 10 stock market terms that every beginner should learn. 1. Stock. A stock represents ownership in a company. When you buy shares of a company, you become a shareholder and may receive dividends if the company distributes profits. Stocks are traded on stock exchanges like the New York Stock Exchange, NYSE, and NASDAQ. 2. Bull market and bear market. A bull market occurs when stock prices rise consistently, indicating strong investor confidence and economic growth. A bear market, on the other hand, happens when stock prices fall by 20% or more, often due to economic downturns or crises. Understanding these trends helps investors make strategic decisions. 3. Market capitalization, market cap. Market capitalization refers to the total value of a company's outstanding shares. It is calculated by multiplying the current stock price by the total number of shares. Companies are categorized as large cap, mid cap, or small cap, which helps investors assess risk and growth potential. 4. IPO, initial public offering. An IPO is when a company sells its shares to the public for the first time. This process allows a private company to become publicly traded. Investors often look for IPO opportunities to invest in new companies with high growth potential. 5. Dividend. A dividend is a portion of a company's profits distributed to shareholders. Companies that pay dividends typically do so on a quarterly basis, making them attractive to investors seeking passive income. Not all stocks pay dividends. Some companies reinvest profits for growth. 6. P/E ratio, price to earnings ratio. The P/E ratio is a valuation metric that compares a stock's price to its earnings per share, EPS. A high P/E ratio suggests a stock may be overvalued, while a low P/E ratio could indicate undervaluation. Investors use this ratio to assess whether a stock is a good buy. 7. Bid price and ask price. The bid price is the highest amount a buyer is willing to pay for a stock, while the ask price is the lowest price a seller is willing to accept. The difference between the two is called the bid-ask spread, which impacts how quickly a trade can be executed. 8. Blue chip stocks. Blue chip stocks refer to shares of large, well-established companies with a history of strong financial performance and stable dividends. Examples include Apple, Microsoft, and Coca-Cola. These stocks are considered low-risk investments due to their reliability. 9. ETF, exchange-traded fund. An ETF is a collection of stocks, bonds, or other assets that trades on an exchange like a regular stock. ETFs provide diversification and are popular among beginners because they reduce the risk of investing in a single company. 10. Portfolio diversification. Diversification means spreading investments across different assets to reduce risk. A well-diversified portfolio includes stocks from various industries, bonds, ETFs, and other assets, ensuring that losses in one sector don't significantly impact overall performance. Understanding these key stock market terms will help beginners feel more confident when investing. Learning the language of investing is the first step toward making informed decisions and building a successful portfolio.